Hey investor friends, I'm Michelle Markey, and today's video on my detailed Ellevest investing experience is going to be part of a larger and recurring theme I'll call Mind the Investing and Wage Gap and the Rise of Women Investors. If you're a woman, this video is for you because I want you to be the best investor you can be. And if you're a male, and if you have a mom, wife, daughter, or female friends, and if you support them having equal pay and financial freedom in their retirement and other investments, then I would like everybody to please like and subscribe to this video and YouTube channel because I'm here to empower everybody to take ownership of their financial futures. Somehow, it's still not enough for the United States women's national soccer team to win 2 World Cup titles back to back. They're still, unfortunately, fighting for equal pay. But I'm glad that we've made some strides slowly but surely since the last time I checked in 2016. Women were making on average 79 cents for every dollar a man made on average. Compared to now, we've inched up to 81 cents to every dollar a man makes. So although Sallie Krawcheck, the founder and CEO of Ellevest, says that at the rate we're going, we won't close pay parity until 2133. I'm excited that we're starting to close the gap, and I'm excited that we can actually take immediate action to make our investing futures better. Sallie felt spurred to start Ellevest because she says women are in a retirement savings crisis, and there's more bad and sad news than good news when it comes to this topic, such as only 12% of women feel like they can comfortably retire, and only 14% of women talk about topics like investing, savings, and retirement plans with their family and close friends. And women only have a median household retirement savings of $23,000, which is a third of what men have, or about $69,000. And women prioritize paying down debt more than they do their retirement savings. But good news is 73% of women contribute to their 401ks, and they contribute 8% of median salary, and they desire an active retirement lifestyle of traveling, spending time with family and friends, volunteering, and hobbies. I totally applaud Ellevest's client focus on women and what Sallie and they stand for, and that women can own their financial destinies. And back then I was so excited to get goodies in the mail like Sallie's Own It book, which came out in 2017, and also a Happy New Year poster from them showing it's a new year and it's time to smash the glass, buck the trend, take the reins, and while we're at it, pop a cork too. So that was pretty awesome of them. When I first learned about Ellevest in 2016 and what Sallie was planning to do, I got super excited and collected all of their white papers and studied them and their investment philosophy, which they're providing diversified asset allocations across low-cost ETFs from Vanguard primarily. And I really enjoyed learning about their motivation, and if you read their latest white paper, they talk about how they were founded to help provide an engaging investing experience to help women meet their financial goals in life. I appreciate that Ellevest did a lot of research to really understand women's needs, and that they're risk aware and have an orientation towards goal setting. So Ellevest meets those needs by providing vehicles to invest for goals like retirement, saving up for a home or kids, building wealth, and starting a business. And these are all valiant goals to have. And not to mention, their user interface is gorgeous. And if you compare them to other competitors out there that provide similar Robo advising services, Ellevest happens to cater to women's needs, but they're open to all genders, so everybody's welcome. And depending on what membership level you go with, you could be paying as low as $1 per month or as high as $9 per month. And depending on how much you invest in the platform, that can be less or more than what some of its competitors offer. And overall, I think it's pretty reasonable. When I first started out using Ellevest, I was paying advisor fees of 0.5%, which had gone down to something like 0.25%, and now it's even less depending on what level of membership you use and how much of your starting principal you contribute. When I first started using their platform, I played around with various goal setting calculations and some random projections. For example, this one where let's say you made $75,000 a year gross and you're 28 and you're contributing $1,250 per month on a consistent basis and compounding that at an average annual compounded growth rate of 6.2%, you'd reach just under $3 million after 41 years of working by age 69 to hopefully comfortably retire. So that was a pretty neat example. And just to do another calculation using a similar $75,000 gross salary per year and using this retirement calculator at rule1investing.com, I put in some inputs to determine that, let's say you're 30 and you work for 35 years, retire at 65, and live hopefully till 95, that you could end up with 1.8 to 2.3 million as your number for what you need to live off of in retirement if you go by this kind of calculation. So whether you're aiming for 1.8 million or $3 million, we need to get up to somewhere close to this range just to survive during a lengthy retirement. And these retirement calculators or goal setting in Ellevest can help you figure out what your number should be. Ellevest likes to run Monte Carlo simulations, and I felt a little disheartened because I was also looking at some of their graphs at a certain amount of odds that could sort of project where you might end up after almost 30 years of investing. And why this was a little disheartening was because I realized that even with $40,000 in there and let's say I'm contributing $1,250 a month, that nevertheless at 70% odds I'd only end up with $112,000, or at 50% odds I'd end up at $146,000, and there's only 5% odds that I'd end up at $344,000. So as you'll see in the series of pictures, it looked like I'd only have some chances of getting 3.8 compounded growth or 4.8% compounded growth and last 8% compounded growth across the odds of 70%, 50%, and 5% respectively. So with that, it made me kind of reconsider if this was really the kind of investing that I wanted to have in my life. My February 2018 final Ellevest asset allocation, which was known as Yes Me back then, became the core asset allocation, and they have another one called Impact, which I'll get into in a second. But these were primarily low-cost Vanguard ETF funds, and they're remarkably mostly the same 2 to 3 years later. As you'll see in the core compared to the impact investing, some of the percentages have changed since a few years ago when I first used the platform, but it looks like with impact portfolio, you'd be investing in much more environmental, social, and governance type of factors. And these include focused on women-led companies and sustainable companies, as well as those that are focused on community development. And some people say that if you invest in impact, it's going to yield less of a return, but that's not necessarily the case. So just because you're supporting more of these noble initiatives, that you can expect to get less of a return across any diversified fund, you can always suspect that your returns might not end up being as much as if you had just invested directly in the company itself. So that's just something to look into if you're interested. Finally, the big reveal. And my Ellevest investment performance over 1.25 years from late 2016 to early 2018 shows that I just barely beat the market for most of 2017 at 0.35%, as you'll see in this chart, and I gained $6,700 over that time, which cumulatively ended up being a 20.6% gain, which you would think that's pretty good. But keep in mind that from some of the Monte Carlo simulations, I wouldn't necessarily be able to expect that consistently. So being that, and I set my investment portfolio to even the plus 5% more aggressive in Ellevest. And so it makes you ask, why would Michelle not want to stay invested this way? It looks like her portfolio was doing great and she made some big gains over that period of time. But like I said, I've become a little bit more interested in investing in stocks and investing more aggressively than what Ellevest seemed to have been able to offer me. And from looking at some of those Monte Carlo simulations, it didn't look like I was going to be able to hit my goals of needing to reach in the multi-millions of dollars just to have a comfortable retirement lifestyle. So that, and for some other reasons, like in one of their job posts for an investment associate, I saw how they value efficient market hypothesis, which is not the way that Warren Buffett invests. So he likes to invest in individual companies and study their valuations, which is what I like to do nowadays. So that's why my investment style has shifted away from investing through Ellevest. But that doesn't mean that I don't still have some of those same goals that Ellevest promotes. I still want to save towards each and every one of those goals that they also value. I just don't want to do it through this platform right now. But I still recommend that women invest if they don't really want to take the time to study on their own, and if they just want a robo advisor that has their needs in mind to invest on their behalf. And I think that you could reliably trust Ellevest to live up to that, doing the best they can through a diversified asset portfolio allocation. So don't worry about if you think that this is not good enough. It's more than good enough for most people, in my opinion. And I wish everybody well on their journey towards financial freedom. And I want Ellevest to keep up its great work in promoting women to invest and to reduce the investing and wage gaps that there are. So if you enjoyed this video or learned something, please like and subscribe. And if you have questions or want to share your experience, please do so in the comments and I'll do my best to respond. Till next time,